Okay, episode number 1 of the intermediate term perspective. This is how we build in a narrative market structure and use the ranges and PD arrays to trade to our high time frame key level. Okay, so we first start off with determining the weekly profile. So determining the weekly profile, you need to have an understanding of the anatomy of a candle from the LTP lessons. We're going to look at data-driven days, the economic calendar, aligning high time frame key levels with intermediate term perspective structure, change in the state of delivery on the intermediate term perspective. Okay, 80% of the time, the high or low of the week is going to form at a weekly and or daily key level whilst running out its relevant range, right? So if it's a weekly key level, the low is going to form, if it's a bullish weekly key level, right? The low is going to be formed by running out a 4-hour range low. If it's a daily key level, it's going to be formed by running out a H1 range low, right? From the LTP lessons, important that you know that. Data-driven days, right? So if we look at the data on NQ, NQ has the tendency to create a low of the week, right? On Mondays, 50% of the time, and a high of the week on Fridays 50% of the time. That's a massive data point, okay? Right, so if we look at the data, clear indication that Monday will form the low of the week 50% of the time on NQ. Friday will form the high of the week 50% of the time on NQ. Again, right, just like the LTP lessons, this data on its own is meaningless. And if you use this data just on its own, every Monday try going long, right? And every Friday just go in and try and short, you'll get wrecked, okay? So we blend this data with all of our analysis to build in a very high probability bias. Again, so using the same example here, because we want to break this down, okay, from an LTP down to an ITP. We have a discount low to premium high, 50%. It's a discount key level, runs out stops into the key level, right? We then have the buy side liquidity, right? Internal to external on the monthly basis, relative equal highs on the daily chart. We then have this expansion leg here, and this is a discount market, right? So we wouldn't be longing up here. Market trades down into discount, running out that one candle range which we covered in the previous lesson, right there. And then remember that weekly OB, right? That we covered in the previous lessons when we closed above, right? So now let's look at that with our data-driven days. Okay, Monday, this is below the one candle range. Monday forms the low of the week here, right? When we trade down into that one candle range is on what time frame? It's on the daily time frame. So the change of the state of delivery to confirm that low of the week or to confirm that key level is going to come on the relative time frame to the daily chart, which is the 1 hour. So as soon as we get the close above the collection of down close candles that trades into that one candle range as our key level, that close right there sets the stage that this could be low of the week, right? It increases its probability that it's low of the week because it's also a data driven day to be low of the week. Trades into fair value gap here, fair value gap trades higher, right? Still got the highs here, that one candle range high, that's that black line. We then have the low that broke the high, we trade down below it. We confirm it with the change in the state of delivery of these two down close candles together. Once we close above the bodies there, sets the stage for longs again, and for this to be a continuation purge to trade to the opposing liquidity. Okay, there's that weekly OB, right? We closed above the weekly OB here. So we're looking for higher prices here from our key level. Right, now this is how you can get wrecked if you just look at Monday and just try immediately long it. This is our high time frame key level. This candle here is Monday. Does it set low of the week? No. Why? Because it didn't trade into the high time frame key level. Okay, so it gets used as inducement. Okay, market then trades below Monday's low as inducement into the high time frame key level, right? So when we're looking at time on a weekly basis is going to be Monday, Tuesday, Wednesday, Thursday, Friday, right? Wednesday in this case had FOMC. That's why we need to keep an eye out on the economic calendar as well. Wednesday then creates low of the week. That's time and price with the high time frame key level. They meet, right? When they meet, that sets the stage for higher prices and the low of the week is set, right? So again, if you were just to use the data on its own, right, and because you're just thinking, well, the data says Monday low of the week is half the time, let's long Tuesday from this discount, from this low to this high, discount retracement. You try to long this, and then you get wrecked here, okay? Because time and price did not meet yet. We do then hit the higher time frame key level. Monday's low gets used as inducement. We then close above this down close candle on an intermediate term perspective. We retested here. We then close above this bearish FVG. It becomes an inverse FVG with a small bullish fair value gap there, and then we can see the market rally higher. Okay, the market then hits a premium key level, right? So this is Monday, Tuesday, Wednesday, Thursday, Friday, right? So Friday 50% of the time sets high of the week. It's relative here because it's hitting a higher time frame premium key level on a Friday. So if we get some level of institutional sponsorship on the lower time frame, we can then look at this as a potential data-driven day to set high of the week, because there is a framework behind why this could be high of the week. Okay, now we're going to be looking at this 1 weekly candle here, okay, and looking at a trade we could have taken with the data-driven days in mind, which is going to be this Friday. So Monday, Tuesday, Wednesday, Thursday, Friday. External range liquidity taken here. We then run above the previous daily high right here, and it's a Friday. Okay, we drop to a lower time frame. On an intermediate term perspective, from this low to this high, we are in a premium. There's the previous daily high getting run. We then see SMT, okay, a valid market profile, accumulation, manipulation, distribution. When we close below the body here, right, on a data-driven day, Friday, we can look for Friday to cap the weekly range, right? Because according to the data, 50% of the time on index futures, NASDAQ, Friday will create the high of the week, which we do here, and we could have caught the short from here down back into a discount market.